is April 22nd edition of Back Roads of Illinois with Cesar Delgado. We were Central Illinois agriculture source and the Midwest for the agricultural industry in Central Illinois. We were glad you're here. I visited with our friends at Advanced Trading with Connor Brimman and Brady Hawk from Dodge City, Kansas. I asked Brady about the bird flu in Kansas. He says that the Department of Agriculture in Kansas, they are checking in with the feeder cattle herd. It's going to have a flu in the feeder. We will see. Come on with the main media. They don't understand about the agricultural industry in the Midwest alongside in the countryside. But it is a pretty crazy situation. Otherwise, we are watching for the development in Texas and Kansas about bird flu. Okay, our guest on today's program is Bob Iaccino from Path Trading in Southwest Florida. We were talking about the economy and inflation for right now. Right after with Bob, we were going to talk with Brian Grete for Pro Farmer in Iowa. We were talking about planting progress in central Iowa for right now. I've been ready for this planting season for beans, but it's been cold and wet in central Illinois. This is your agricultural news on Back Roads of Illinois, here on a Monday morning. The Farm Bill is in a deadlock in Washington, D.C. because the Republicans and Democrats are not budget for these proposals for the SNAP program for the Farm Bill because some Republicans will probably losing their own support for the SNAP program and CPR program by the Democrats. Senator John Bozeman of Arkansas. He hoping that the Farm Bill is working out by Memorial Day weekend. Iran attack on Israel for last weekend. Israel did attack on Iran for Thursday's night. The oil markets are trading higher than expected after the attack by Israel on Thursday night. The markets took a dip in the beans on Friday's trading. The beans were performed poorly in the markets for Friday. Otherwise, the cattle on feed report from the Department of Agriculture. It was coming out on Friday afternoon. Otherwise, it was down at there. This is your agricultural news on Back Roads of Illinois. We were coming back with Bob Iaccino from Path Trading in Southwest Florida and Brian Grete for Pro Farmer. Please don't change. Welcome back on Back Roads of Illinois with our guest today is Bob Iaccino from Path Trading in Southwest Florida. I am glad to have him on this morning. Welcome to the show. How are you, Bob?
I'm good. How are you, Cesar? I'm very happy to be here.
I'm great. Let's start with our conversation about the Federal Reserve on the inflation. What is their stand for the inflation rate for right now alongside taking the economy?
Well, I think the Federal Reserve thinks inflation is coming down. And when you see inflation data, people look at the CPI or the PCE data, they see just a number and they look at that number and they see whether it's up or down. But what's more important is whether there is a plus in front of the number or a minus in front of the number. and we have not seen a minus in a very, very long time, which means while the number is getting smaller, it's still rising. So inflation has continued to go higher, even though it's gone higher at a slower rate. And now it's starting to go higher at a much faster rate than before. Not as bad as it was in the middle of last year, but still we're looking at a core inflation well above 2%, which is the Fed's target. But the Federal Reserve thinks it's going to fall towards 2% inflation. The bond market doesn't necessarily think that. So we've got a little bit of a conflict between the bond market and the Fed. The Fed thinks it's going lower, and that's the reason I think they want to cut rates before the end of the year.
This means that we are going to be in rest on an island.
I don't know if it means that yet, Cesar, to be honest, but we're going to be in flux definitely in terms of the direction of interest rates. They're not going to raise interest rates. The question is now whether they're going to cut them or whether they're going to leave them the same for longer.
Bob, how do you see impacting the oil markets for today's world events with Iran and Israel? What is your sources for right now?
All right, so oil has been coming off since it seems like the tensions with Iran and Israel have been sort of calming down. I don't believe those tensions are over. That's number one. Most of the people I speak to think that Israel will retaliate, and it's just a matter of the right time for them to do so. But the market has taken that risk out. The second part of that is what is Iran's reaction to any Israel response, even though the attack from Iran was muted by Israeli defenses. If Israel then responds and Iran responds in kind, you could expect oil to spike again off of that. Otherwise, the price of oil is much higher than when President Biden took office. It's still somewhere in the range of 23% higher than it was when President Trump left office. So oil is part of the reason inflation is not coming down because it's such a large input to other prices that we pay. So oil's very critical, the direction of it, and whether it's going to come down substantially or whether there's going to be problems with Iran and Israel that are going to cause it to spike.
Not good with the costs of the gas and food.
Right. And the price of oil and gas goes into your price of food because of shipping costs to grocery stores. So, and people in your area of Illinois know that very well.
The economy is pretty good for right now. This administration wanted to say, but the labor market is not so good with the costs are high, especially and the economy is lacking in central demand. What is your thoughts? Could you tell our listeners about these issues?
Yeah, there are signs that the labor market is softening a little bit, but that's almost as if, you gain 2 pounds. It's not that much, but it is there, right? So there is some softening in the labor market, but not enough to lower labor costs yet. And labor costs are a very large input to the inflation story. So labor costs are still rising. Unit labor costs are still rising, but similar to inflation, they're rising at a slower pace than they were, say, 3 months ago. The administration wants to say that the Fed should cut rates. The Fed wants to cut rates. I don't believe either should happen. I don't believe that the Fed should cut rates, but I do think they will cut rates. When you look at labor costs, it is finally caught up to inflation, but there's still the prior years where inflation was going higher and labor costs didn't catch up. So all we're seeing is labor costs, or what people are making, catching up to inflation now, but there's still a big spread, so to speak, from where inflation took prices in the first place when people didn't have the increases in labor yet. So labor is a problem for both the administration and for the Fed. Yeah, that's a key point, Cesar. Agricultural things like fertilizer, and again, we're talking about costs. we're talking about gasoline, whether it's diesel or regular gasoline, is still very much elevated. And that's affecting not just the agricultural sector, but certainly in central Illinois, that's a very big deal. And they've noticed it and they're not forgetting it, in my opinion.
Talk to me. What is your sources for the spending in Washington, D.C. for Ukraine and Israel, especially in the Pacific Rims? Could you tell us about that?
Well, government spending is definitely out of control. As you know, at this point, they've just approved more funding for Ukraine and Israel inside of another bill, basically. So they're doing their typical Washington compromise, where they agree to funding in order to pursue other avenues in the government. Government spending is $100 billion a day now. You're seeing $1 trillion of new debt every year coming into the US. These are very big numbers and they're very bad because what they do is they raise borrowing costs for consumers. They raise yields on the long end where the Fed does not control the yield. And I'm talking about the 10-year yield and the 30-year yield, which is what really affects consumers, especially in things like equipment purchases and home purchases. Those are the yields that matter to consumers. So the spending is out of control. And it's been that way for a while now. It's not just this administration. It's more about Congress, who should really be the legislative body, should really control spending by not allocating funds. And the entire government is out of control with their spending. All of that's going to come back on regular Americans in their tax bill. And that reduces the amount that we can spend. Therefore, because we spend more efficiently, it's inefficient for the economy, government spending in general.
That's crazy about our lawmakers. Both parties are not working.
No, it's almost two sides of the same coin when you think about our lawmakers in terms of spending. But they're smart enough to know that most people vote on other things. So they oppose each other on other things, and they're bipartisan when it comes to spending and pushing out money to foreign governments when we have money that could help our own citizens. And that's what upsets me the most.
Finally, do you have any final thoughts on the economy and inflation rate spending bill?
Well, first of all, let's take that in reverse. The Inflation Reduction Act was the opposite of what it was named. It's the Inflation Increasing Act because it's a spending bill. So when you're trying to control inflation, you're trying to reduce the amount of money in circulation, which translates into reducing spending. And they increase spending. So there's that. Number two, on the economy and inflation, I think we're in what I call a reflationary cycle, which means inflation is starting to rebound and go higher again. But inside of inflation is also asset inflation, meaning the price of land, the price of homes, the price of the equity market, the price of gold. Those are also going to rise along with prices. That's not a good thing for consumers in general. You want to see assets stable and inflation falling, and that's not what, in my opinion, we're seeing right now.
Thanks, Bob. I enjoyed our conversation about the economy and politics.
Very happy to be here, Cesar. Thanks for having me, and thanks to your listeners for listening.
This is Bob Iaccino from Path Trading in Southwest Florida. We were coming back. Welcome back with Brian Grete for Pro Farmer in Iowa. Hey, Brian, how are you been?
I've been well, Cesar. Thank you for having me.
Let's talk about the crop conditions in central Iowa for right now. Could you tell our audience about it?
Yeah, so Iowa as a whole has been relatively dry, and so when you look at the drought monitor, we are here in northeastern Iowa and about the driest spot within the state. And so while we've had recent rains that have improved conditions as we head into planting, we're still dry on the dry side and going to need some timely rains as we move through spring and then the summer growing season. It could be worse. Like I said, we have received some recent rains, but it could be better as well. And so we'll see how the planting season progresses and then how the growing season progresses through the summer months. And I think that given the dryness that we have here in spring, everybody is kind of interested in what happens with the development in the transition from ENSO neutral, which we're into right now, into the potential La Nina.
We were looking at the acreage report on June 30th. What is your sources is showing for that?
When we did our spring acreage survey ahead of USDA's prospective plantings report at the end of March, USDA came up with 90 million acres for corn, and our survey showed 91.8 million acres. So we feel like if the conditions are right this spring and everything goes well for the farmers, that we probably will plant a few more acres than what USDA indicated were intended as of March. On the soybean side of things, USDA was at 86.5 million acres, and that was really close to what our survey indicated. So we would tend to lean toward more corn acres and about the same number of soybean acres as what USDA indicated. But, weather conditions have a big say in that. The better the weather conditions historically, the more corn that gets planted. The slower the start on the corn planting pace, have a tendency to switch more acres over to soybeans. And right now, what we're seeing in the crop condition updates early in the season is that both the corn and soybean planting paces are ahead of what the average is. And so, like I said, we would tend to feel like there will be more corn acres planted than what USDA indicated in the March intentions.
We were going to have some severe weather in central Illinois and the Midwest for Thursday into Sunday morning. What does the farmers to get in the field for this weekend?
Well, I think as a whole, the farmer will be able to plant quite a bit of crops this week. Those storms that are coming obviously will slow things down, and it looks like that 10-day window isn't going to be the best in terms of planting. But like I said, we're off to a better than average start for both corn and soybean planting. I think that will continue as we move forward, unless these storms that are moving through happen to last longer than that 10-day window. Now, if that's the case, we could have some delays. Now, outside of the Corn Belt, down in the Delta, it's been very wet, and so they will experience some greater delays down in there. But the Corn Belt as a whole, I think, is off to a pretty good start from a planting perspective.
Do you have any final thoughts on these markets and cash market in Iowa?
So what we're seeing is the cash market, the basis is firming, and that's a seasonal thing, both for corn and soybeans. We're still holding below the average for both of the corn and soybean basis locally here and across the Corn Belt as a whole. And so some of that is tied to the lack of export pace, especially on the soybeans. The corn export pace has actually picked up and doing relatively well at the moment. So I think that what we'll see is the seasonally firming basis as we move forward over the next month or so here.
Yes, I know what you mean. Otherwise, beans are looking lower.
the soybean market has struggled, as has corn, but soybeans in particular have struggled to put in lows here. The meal market's been a weight on soybeans, and if we see some price strength in the meal market like we did here to open up the week, soybeans, the funds are heavily short, not only in soybeans but across the grain and soy markets, and so if we have a catalyst like weather that encourages them to actively cover short positions, we can put some gains on relatively quickly. The flip side of that is as the market rallies, there's still a lot of corn and soybeans stored on farm. And as a result, there's going to be active farmer selling. And so there's going to be a lot of competition for each individual farmer out there making sales. And that could have the potential to cap the market.
Thanks, Brian.
My pleasure, Cesar. Glad to be with you.
This is Brian Grete for Pro Farmer in Iowa. We were coming back with our last segment on back roads. Welcome back on back roads of Illinois. Thanks, Bob Iaccino and Brian Grete for visiting our show. I visited Mac Marshall from United Soybeans Board and Ted Ness from Zenra Hedges out of downtown Chicago. We talked about Brazil's soybean production from the state of Mato Grosso. It's pretty disappointing numbers in Brazil since December, but Ted said that we were not sure if the number is not added up to the nearest numbers of the beans in the report from Brazil's the Department of Agricultural. We'll watch the planting season kick off with our farms in central Illinois near Peoria between Macomb to Champaign. Well, folks, there's our show for today. Thanks to listen on Back Roads of Illinois for Back Roads of Illinois. I am Cesar Delgado. Have a great day.